Today's focus. Bitcoin buying has reached a new cycle high. The Fed's rate cut is almost certain. Will the market reverse directly? Vanguard Group has opened up direct crypto ETF purchases to 50 million clients. With Bitcoin surging past $92,000, is this a real breakout? The Polish president has vetoed the crypto asset law passed by parliament. Why is the crypto community so happy about this? It's Wednesday, December 3rd. This is TV Chinese channel Face Change. I'm Michael. Let's first look at the most important 24-hour data headlines in the crypto space. The CME FedWatch data is basically shouting it out. A rate cut in February is almost certain, with the probability of a 25 basis point cut reaching 84.3%. The market sentiment is practically written all over their faces. What are they saying? Fed, please hurry up and cut rates. Everyone can't wait any longer. What's even more dramatic is that investors have already scheduled a 25 basis point rate cut for January 2026 for the Fed in advance, with a probability of 66%, and even a 50 basis point cut has a 25% chance. Basically, they're treating the future path as a foregone conclusion when making investment decisions. The message is clear. The easing cycle might arrive sooner than anyone expects. No wonder institutions have been extremely active lately. Whether it's stocks, crypto, gold, or other high beta investment products, they're quietly increasing any positions that can go up. So what institutions are doing now is a classic case of shifting into high gear before a rate cut. They don't wait for the money to actually arrive. They secure their seats first. History has also proven that every time a new easing cycle begins, it's always the initial stage when risk assets are most likely to rise. Right now, the entire market feels like it's in a huge waiting period before an interest rate cut. Everyone is closely watching the Federal Reserve's meetings while adjusting their positions to be ready to jump in at any moment. Once rates actually come down and liquidity starts to recover, the market is likely to surge all at once, not just rise slowly. It's like flooring the gas pedal and watching everything take off. So this isn't the end of the rally. It's more like a deep breath before a major move. Let's look at Ethereum's current state. What does Ethereum look like now? It's like a supermarket with empty shelves. While the price is stuck around $3,000, the amount of Ethereum you can buy is getting less. The supply ratio of trading volume on Binance and ETH2 has been dropping, almost reaching its lowest point. So now we have a bullish divergence where Ethereum's price is moving sideways, but the supply is dropping sharply. What does this mean? It's simple. The market isn't really selling anymore, and when there's no more selling pressure, what happens? It's like a spring. The more it's compressed, the stronger the rebound. So the current situation is that as long as there's even a little bit of new buying interest in Ethereum, the price could jump even faster than before. In the short term, Ethereum needs to overcome the hurdle in the $3,350 to $3,450 range. Once it stabilizes there, the next stop for Ethereum will be $4,000. Right now, Ethereum is in a classic state of supply exhaustion, but it's on the verge of demand returning at any moment. It sounds like the market hasn't even started yet, but the spark has already been found. So, on-chain data has also given everyone a very loud signal. This Bitcoin rally is far from cooling off. In fact, it's heating up to the point of almost smoking. Yesterday, the taker-to-buy ratio shot up directly to around 1.17, which is the highest taker value in the 2023 to 2025 cycle. What does that mean? It means buyers are being aggressively relentless. Sellers are completely unable to suppress the buying power. When does this kind of data usually appear? It's either right before takeoff or during the takeoff itself. Why is it so intense? There are three main reasons. First, Vanguard suddenly gave the green light, allowing 50 million users to directly purchase Bitcoin ETFs, so there was a sudden structural surge in buying inflows. Second, global liquidity is shifting from a suffocatingly tight situation to one where there's finally a bit of breathing room. This is exactly the kind of environment Bitcoin likes best. Third, even though Bitcoin's price has been fluctuating recently, none of the signals that typically indicate a bull market have appeared, right? We've looked at more than 30 indicators, and so far, not a single institution has entered the market. So, in our weekly review, we concluded that it's not a bear market, it's just that the bull market hasn't even started yet. So, there's really no talk of a bear market at all. Bitcoin is not at the last gasp of a bull market right now. Rather, the next chapter is about to begin. Now let's look at the news. I'm currently in Dubai, and this trip is at Binance's invitation to attend Binance Blockchain Week. While we're here, we'll also be giving another talk at Bitcoin Asia, where we'll explain how BTV has become the central hub for traffic aggregation in Asia. Every like, share, or even becoming a member is the most effective and direct support for our channel over the past 6 years. Thank you all. Let's look at today's top headline. Let's check out whether Bitcoin's price surge over the past 2 days is really a 6% big jump. Look at this candlestick with a particularly long lower shadow, right? Who drew this? Vanguard Group. Vanguard can be said to be the world's second largest asset management giant. They suddenly announced that ETFs for Bitcoin, Ethereum, Solana, Ripple, and other crypto assets can now be purchased directly through them. So as soon as the US stock market opened, Bitcoin shot up directly from 87,000 to 92,000. Bloomberg analyst Balchunas put it even more bluntly. He called this the Vanguard effect. What's even more striking than the price surge is that suddenly Bitcoin isn't so disliked anymore. As a result, in just 30 minutes, Bitcoin's trading volume soared to $1 billion.
Last May, former CEO Tim Buckley publicly stated that Bitcoin should not be included in retirement investment portfolios. The new CEO, Salim Ramji, was still conservative in his stance as of August. But just a few months later, Vanguard fully opened up crypto asset trading. The key factors driving this shift were strong client demand, competitors accelerating their push into the market, and Bitcoin ETFs having become a mainstream global asset allocation.
Tyler, we won't be pursuing a Bitcoin ETF, just like we don't use gold as an asset class for our clients. It's not that people can't invest in those things. We just look at asset classes, what belongs in a long-term portfolio, what has intrinsic value, what generates cash flows, and those are the asset classes we guide people toward.
As demand for crypto assets from traditional financial users rises, Vanguard realized that refusing to offer crypto products would directly lead to clients closing their accounts and switching to competitors. Under market pressure, it became difficult for the company to stick to its ideological stance. Ultimately, they chose a compromise. Instead of issuing products themselves, they opened up third-party channels, allowing their 50 million clients to purchase regulated, vetted crypto ETFs.
All right, let's talk about this new Vanguard group. What exactly is it? It's the world's second largest asset management company, right after BlackRock. How much client assets does it hold? 100 trillion US dollars. So if just 1% of that is invested in the crypto market, that's $1 trillion in buying power, enough to keep the crypto market fed for half a year, right? So why is it that at this particular opportunity, Vanguard is launching this, allowing users to directly purchase ETFs? Could it be that institutions also believe that Bitcoin at over $80,000 is already very attractive? Now, letting users enter the market means they won't lose out or be taken advantage of. The underlying message is simple. Institutions are about to bring traditional capital in to buy the dip. All right, let's take a look at Poland. Poland is a member of MyCA and also a member of the European Union. In the past couple of years, Poland's market stance has been wavering. If they follow MyCA too closely, they're afraid of being overly regulated by the market authorities. If they're too lax, they're worried about being accused of neglecting regulation. So just a few years ago, Poland only started to regard cryptocurrency as an asset. Last year's new EU regulations were also dutifully implemented. However, the current Polish president, Karol Nawak, suddenly made a bold move. He just vetoed the crypto asset law that had been passed by Parliament, a law that was supposed to regulate, crack down on, and restrict the industry. So the president essentially raised his hand and declared, "We want freedom, not regulation."
Well, the researchers and service providers say that there is significant interest in the cryptocurrency and crypto asset markets, and it's growing. This economy, this market will expand, and the trend is that it's continuing to expand. And the investors are very much eager to remain actively involved in the market, to invest significantly in various platforms and in diverse crypto assets in general, demonstrating their continued interest and commitment.
On December 2nd, Karol Nawak officially vetoed the Crypto Asset Market Act, citing concerns that the provisions of the bill could endanger the freedom, property, and national stability of Polish citizens. Since its announcement in June, the bill has continued to spark controversy. Politicians like Tomasz Mencina and other industry insiders have long criticized its loopholes and predicted that the president would not sign it. The most contentious part is the domain blocking provision, which authorizes regulatory agencies to block crypto websites based on vague materials. The president's office determined that this could lead to abuse of power and directly harm the legitimate rights and interests of the public in the crypto sector.
Why did the Polish president reject and veto this bill? The bill stipulated that there are only two things crypto companies in Poland cannot do. Basically, you can't do this and you can't do that. But there's only one thing you absolutely must do. You have to pay high management fees and obtain a license. So, in the president's view, this is a key point that restricts the development of crypto in Poland. He even said that if this bill goes into effect, it would be like driving our own people abroad and letting foreigners come here to make money off our country. So now Poland has entered a policy vacuum period. At least for now, Polish companies don't need to be intimidated by the MyCA Act, nor do they have to feel besieged on all sides, scrambling to obtain compliance licenses. So, do you think the Polish president's actions are right? In the face of MyCA's relentless pressure, will Poland give in? In Europe, with regulation overwhelmingly one-sided, will cryptocurrencies rebound, or will they continue to be suppressed? The comment section is yours. Here, there are legends of getting rich overnight. And there are also carefully scripted scams. This is a dark forest of chaotic development, yet here also lies a lake of hope leading to the light. The destination of faith is freedom. The endpoint of consensus is equality. Hotel TV takes you through the fog to see the future, and together we'll gradually become wealthier. Retail investors are deeply trapped, gathering gold and happily buying the dip. Is the pullback in November a bull market shakeout or a sign of an impending bear market? Elon Musk predicted that paper money will be phased out. Can Bitcoin, anchored to energy, withstand the debt crisis? Only time will tell. Our channel has always been staunchly bullish. In our book reviews, we've used various indicators to show that indeed bearish signals have already appeared. However, we haven't seen any indicators of a market top. So if you say that this 32% pullback counts as a bear market plunge or the start of a new 4-year cycle, that's not entirely unreasonable. But what are indicators? What is price? It's all formed week by week, candle by candle. Any prediction about a 4-year cycle or a slow bull market is just a perspective on the future. So what we need to do is go with the trend of the market. Now, with a 32% drop, I think this is just a deep breath in the middle of a bull market. In which Bitcoin bull run have we not seen a 30% or even around 40% correction? Let me break it down for you. From 2010 up to now, during Bitcoin's upward trends, there have been 50 roller coaster drops of over 10%, with the average correction being 30%. So Grayscale has made it very clear for a long time. They said, Bitcoin, this thing, has high returns, but also a big temper. There's a lot of noise on the outside, but in the end, it depends on whether you can hold on to it yourself.
Well, I think Bitcoin is going to continue to grind up. I think the volatility is coming off of it as the industry becomes more structured with more derivatives and more ways to hedge it. Our expectation right now is that by the end of the year, it should be about $150,000.
Party Theory believes that Bitcoin fluctuates according to the 4-year halving cycle, but Grayscale thinks that this bull market has already broken away from the old pattern. The rise is no longer driven by retail investors, but is now led by ETPs and digital asset treasuries. As of the end of November, there were 124 crypto products in the US. The structure of the $145 billion under management is clearly different from before, with pronounced differences between sectors. Privacy coins performed the strongest, with Monero rising by 30% and another coin up 40%. Ethereum is also moving in the direction of privacy. The AI sector, however, fell by 25%. Usage of Near's cross-chain tool increased, and Coinbase's X402 protocol saw daily transaction volume grow from 50,000 to 2 million.
Although this round for Bitcoin is frustrating because of the drop, bottom signals are lighting up one after another. Just look at how everyone is scrambling to buy options, right? That shows everyone is buckling up their seatbelts first. Some digital asset wealth management companies currently don't have any valuable coins or assets in their hands. This kind of dry speculative state is usually the standard setup before a major rebound. So the main event coming up is to see what the Federal Reserve will announce at its interest rate meeting on December 10th. If the popular candidate Kevin Hassett is elected as chairman, then what he said to CBN in September was very clear. A 25 basis point rate cut is just the first step toward a major rate reduction. We really hope this guy can successfully become the chairman of the Federal Reserve. In October, Zero Hedge published a report stating that AI is not really a tech stock right now, nor can it be considered a tech company. So what is it? They said AI is more like an intensified version of the military arms race between governments, and in the end, the ones footing the bill, in their view, won't be the tech giants, but rather those who are frantically taking on more debt and printing money, treating fiscal policy as a lifeline. What happens when these centralized governments treat fiscal policy and issuing debt as their own personal ATM? You can see it. Gold has gone up, silver has surged, and now even Bitcoin is starting to accelerate, right? Just a couple of days ago, Elon Musk tweeted, did you notice? He said, you can print as much money as you want, but can you print energy? What does that mean? Think about it for a moment.
Elon Musk recently stated that the United States' annual fiscal deficit of about $2 trillion has created a structural risk to the country's monetary credibility, and he predicted that the real currency of the future world will not be paper money or digital fiat currency. Instead, it will be energy. He emphasized that the core value of Bitcoin lies in its anchoring to energy, making it impossible for those in power to arbitrarily increase its supply, which gives it a natural hedging property in times of high inflation and high debt.
U.S. Treasury bonds are high, and the U.S. national debt reached $2 trillion in a year. High interest rates are pressuring the U.S. government, and Treasury struggles. If the Federal Reserve signals quantitative easing, what then? Debt will depreciate and currency will be diluted. At this point, it perfectly aligns with what Musk said. In the future, what will truly be valuable is energy, because you can't create energy out of thin air, but you can print fiat currency infinitely, right? So, looking at it this way, Bitcoin, which is a hard currency produced through energy, will absolutely thrive in a rate-cutting environment. It's like having a cheat code. So, while traditional assets will be affected by rate cuts, Bitcoin, which doesn't rely on credit, assets that are backed purely by energy and power will be the most likely frontrunners in the next wave of liquidity. And besides Bitcoin, there's another undervalued area with real potential: assets that use a truly decentralized proof of work (POW) mechanism. Dogecoin. This is the fundamental reason why, even when Musk can't openly promote Dogecoin, you still see it on his hats, clothes, and even in references to government efficiency. So what does Dogecoin really mean for Musk's entire ecosystem strategy? Once our new platform launches, I'll break it all down for you step by step in a special program. Stay tuned for updates.
Amazon just made a big move. Its new chip, Trainium 3, offers training speeds 4 times faster than the previous generation. They're going straight after NVIDIA's market share. In the future, when doing large-scale training on AWS, you might not have to wait in line for NVIDIA GPUs anymore. Amazon is clearly aiming to get a piece of the pie. Eric Trump's American Bitcoin group was so spooked by the restricted shares that the stock price was cut in half within half an hour of opening. Trading was halted several times, and it finally closed at $2.33, plunging for the whole day. It dropped 35%. Even more surreal, the company had just made a grand debut on the stock market in September, and now it's been hit hard by the market in an instant. Standard Chartered executive Bill Winters summed it up in one sentence: public blockchains will eventually replace the traditional financial system. If you don't upgrade, you'll be left behind. Standard Chartered has already started pushing into tokenized stablecoins and central bank digital currencies. Everyone is getting involved. Recently, the US SEC suddenly started issuing warnings, clamping down on issuers who want to launch leveraged ETFs promising double or triple daily returns. The message is clear: don't even think about using high leverage to stimulate the market. This time, regulators are really stepping on the brakes. The UNDP's Asia-Pacific Bureau's number 2 sounded the alarm directly. If no one regulates AI, not only will the world not become fairer, but the gap between countries could actually widen. Simply put, the richer countries will only get stronger at AI. Countries with weaker foundations will only fall further behind. Global inequality won't improve. In fact, AI might make it even worse. Double it.
After arriving in Dubai and chatting with many friends from the mainland, I realized they're still caught up in the rat race. So today, let me share some words of encouragement for these friends. Live with clarity. Don't always try to please others. That's what I believe is right. Gordegang once said, if you're satisfied with everything, it means you've been taken advantage of all along. Those people who say you're immature, it's because they say you're not obedient because you don't always listen. They say you have a bad temper because you didn't go along. They say you're not a team player because you're not easily fooled. They say you're sensitive because you guessed right. They say you lack vision, but that's just the pie they drew and you didn't buy into it. So you see, there's no need to keep making things hard for yourself just to meet others' expectations. In this life, if you can manage not to let yourself down, that's already pretty great. As for everything else, let people think what they want. Let them do as they please. Most of the time, others' opinions of you are just their hopes that you'll become the version of you they imagine. The more you try to please them, the more they'll demand from you. So remember this: those who understand you don't need explanations. And for those who don't, explanations are useless. In the end, life is really about making peace with yourself and growing as a person, not about putting on a show to please the world. Instead of trying to please everyone, live comfortably yourself. Not letting yourself down is the greatest dignity for an adult. If you get what I mean, give this a like. We're in Dubai, and over the next couple of days, we'll bring you coverage from Binance Blockchain Week and the Bitcoin conference here. We hope you'll consider joining our membership, where you'll get access to all member benefits. Let's work together to gradually become wealthier. See you tomorrow.